Hi, and welcome back to another episode of The Mortgage Musketeer, where today I'm going to be talking about online mortgage calculators, especially from places like Zillow, that are incredibly misleading and don't give you an accurate picture of what your monthly payment is going to be for a multitude of reasons. From one spectrum to the other spectrum, there's no way that those can accurately give you your monthly payment, and I'm going to show you why. I'm going to give you two very powerful examples that explain exactly what's going on and why you can't trust them, and why the only person that you should be talking to about your monthly payment is your loan officer, because anything else is horribly inaccurate. Okay, so what we're going to do is I'm actually going to show you online what's going on. This is actually spurred from a client that I had who wanted to buy a $185,000 payment but wanted that $650 payment. And I could not comprehend where in the world that number was coming from. And I didn't understand if it was, dealing with just math or was there some massive misunderstanding. And then I started to look into these online mortgage payments, and she couldn't comprehend how a $185,000 house couldn't be a $600 or $700 payment. The reality is, for her scenario, in order for her to get about a $685 payment, the maximum home that she could buy would be $100,000. And it is just math. But if the math is wrong, it can be misleading. And that's why this is so incredibly important to understand. So I'm going to actually break down a couple random examples here and show you online of what's going on. So let's take a look. Okay, so this was literally a random house. I just Googled houses for sale in Pikeville, Kentucky. All right, and I'm going to give another example in Louisville, Kentucky. All right, and this would apply to any state, anywhere, and it just gives you a good example of how these are wrong. So this is 149.9, okay, and this is on the old Zillow. Zillow is like the Wikipedia of houses. You really can't trust any information that's in here. All right, and you just need to know that. That's why you have to go through realtors, because it's just so misleading. It's all marketing. It's all advertising. And if you know that, great. But see how this is saying that there's a monthly cost of $643. Principal and interest at $508, property taxes at $82, homeowner insurance at $52, and yay, you have a $643 payment. But you know what? There is no possible way, unless you're doing a 20% down, and even then, that's not accurate. And let me explain why. Okay, so in each one of these drop downs here, it has property tax rates. So where they get that, I don't know, because here in Pikeville, Kentucky, it is 1.4%. So this is nowhere close to what it should be. So unless you actually know what it is, it's going to be incredibly far off of the mark. All right, so if we were to take this back out and then click back on it and let it set up its little payment calculator. All right, so it's talking property tax at $82 a month. And the other thing too is $52 for homeowner insurance. I mean, come on. You're not going to find that out there for $52 for $149. And they just don't know. The issue is that whatever they're using for this algorithm does not know the local market, period. So what would this payment actually look like if we were to run a scenario? Okay, so I'm going to show you what that would look like. All right, so this is what your payment would be on a home that is that price range. So it's actually about $620, because most likely, in this scenario, they're looking at an FHA loan, right? So here, they're probably looking at a conventional loan with 20% down. But let's say this was an FHA. The borrower qualified for FHA. All right, so it's going to be 3.5% down. If it's 3.5% down, then their monthly payment is going to be $620 a month. Homeowner insurance probably going to be around $100 a month, and the county property taxes are $174.88, which is nowhere close. I mean, it's like $120 higher than this. And then you're looking at mortgage insurance of $101, because FHA loans carry mortgage insurance of 0.85%. So this doesn't have mortgage insurance either. So when somebody who does not qualify for a conventional mortgage and wants to come in at FHA, they don't understand why they can't get this payment. Right? They're thinking they can get this. if you were looking at a $185,000 house, like the example that I gave, it's going to be close to $1,200, right? It's just a massive difference. This is so misleading and people don't understand it. So you can't look at this, the property tax at $82 a month. They don't know that it would actually be $174 a month in that area. Massive difference. And then homeowners insurance, is it possible to get it that low? Yeah, but if they did, then they probably wouldn't be in an FHA loan. And I just haven't seen any insurance in that area that low. It's just not accurate. So just based on experience, it's probably going to be about $100 a month. All right. So it's dependent upon area. So understanding the area, that's why it's so critical. And that's why all these online, these Rocket and all this other crap, they don't know what the heck they're talking about. They'll give you a payment like this, and then they'll say, oh, well, you shop for the insurance and it's higher. I can't control that. And during underwriting, title's going to figure out what the property taxes are. And I say, oh, it was higher. There's no way that we can predict that because, it just depends on the house itself. Yeah, there is a way that you can figure it out if you actually know the area or if you take the time to look it up. So super, super important. And then adding in mortgage insurance is another $100 a month. So on a $150,000 home, you're looking about a $996 monthly payment. Okay, let's take a look at another example. All right, and this one is with a house in Louisville. Okay, again, just Googled houses for sale in Louisville. Boom, popped up this particular house, and it's showing a monthly payment of $948. So what's interesting about this is it's based upon 20% down, right? And it'll tell you. So putting down 20%. All right. Now, if this was a conventional mortgage, that's still a relatively high on payment. But on top of that is the property taxes. So it's showing $163 a month, right? And then homeowners insurance at $74 a month. All right, so here it's talking about a tax rate of 0.93. So in Louisville, it'll range anywhere from 0.98 to 1.2. So where they get this, I don't even know. The other issue that you're going to have is people are if they're homesteading, then sometimes they have a lower tax rate. But you have to understand that when you buy your home, whatever sales price is recorded with the PVA, so that when they do your property taxes, that's new assessed value, the sales price. So you really can't look at this at all, no matter what, because it can vary. It can be super low or it can be super high. Okay, so if we look at the property taxes, you see here it's assessed at $122,720, right? So the property taxes that are shown here are far less than what the actual purchase price is. So if it's $122,720 and they're selling it at $210, it's going to be a lot more expensive on the property taxes. So this property taxes isn't even accurate the way it's written here. So these are things that you have to know when you're buying a home, and you're not going to get it intuitively. You're going to need to talk to your loan officer, right? And then homeowner insurance. Now, again, depending on the area, because there's more fire departments and things like that. So your homeowner insurance, which is also called hazard insurance, might be cheaper in a bigger city than it is out in a rural county. So you just never know. On top of this is assuming 20% down. Well, what if you did 5% down? If you did 5% down, you have a completely different loan amount, and your property taxes, homeowner insurance, and you're going to have some mortgage insurance on top of this. So most likely it would look more like this. So $841 for your principal and interest, $100 for homeowner insurance on $210,000 house. I have seen it lower. So if somebody's got like a 760 credit score, yeah, you might be around $70 a month. That'd be awesome. But it'll range. And that's the thing, is homeowner insurance is absolutely dependent upon your individual credit score and the house location. It varies by zip code. So there's no way to really predict this until you actually get a quote. And the county property taxes, if we went on the high end at 1.2, it's $210 a month. And then mortgage insurance estimated around $87 a month on an A+ credit score, like a 760 or above. So you can see how the payments are much, much different than what they're actually showing here. It's like $1,238 if they only put 5% down. Okay, so you just can't predict this, right? You can't tell what the actual payment. These are wildly inaccurate. Again, talk to your loan officer. All right, so hopefully that'll actually break down and help you understand that these online calculators are horribly inaccurate. There's no way. Your loan officer knows how to actually build your loan and give you a good estimate. Now, there should be estimating probably a little high. Me personally, I like to under promise and over deliver. So I will just experiences give me, I know kind of based on your credit score, based on the home, where you're buying, I have an idea where you're going to be. I won't ever be low. So I will never give you a payment that all of a sudden, while you're in underwriting, well, you shot for insurance and you didn't get a good insurance, so it went up. That's crap, right? So a good loan officer will actually know kind of based on your credit score where the range will be, all right, and the type of house and where it's located, just based off experience. Property taxes, you should know the local area as a loan officer and be able to predict. And again, I will go high. So for instance, when I was giving the examples in Louisville, it'll go from 0.98 to 1.2. I will always estimate 1.2. Okay, that way I know that you're qualified. All right, and I'll give you worst case scenario. And then if you end up in an area where your property taxes are 0.98, then everything lowers. Much better to tell you, hey, your payment is less than tell you your payment is more. All right, so understand these things. You as a home buyer don't do this every day. So it's easy for you to be misled. And it's not anything against you, it's just you should be able to think that, hey, some of these online stuff will be able to tell you what you know. It's clickbait. Okay, it's online. It is clickbait. It is designed for you to go, ooh, click on, go want to see the house, and to reel you in. All right? Talk to a loan officer, because a loan officer is going to give you an accurate picture of what your monthly payment is going to be. All right? Hopefully this explains a little bit, but I just ran into that where somebody was really led astray, caused a lot of emotions because they couldn't comprehend how come an online calculator was saying that they're going to pay $650 a month for something, and I'm telling them that it's going to be like $1,200. And it's because they're not putting 20% down. They're FHA, they've got mortgage insurance, their homeowner insurance is higher than what that online calculator, and the property taxes are over $100 higher. It all adds up, right? So that's about buying power. So she was confused because she didn't understand how the monthly payments are built, and she's looking online and seeing a $185,000 house, and the mortgage calculator is telling her that she can get it for like $650. Well, no, it's not going to work like that. So that's why it's incredibly important to talk to your loan officer, and don't use these online calculators, because they are horribly inaccurate, and you just don't, as a regular buyer, you don't have the experience to know all of the different nuances that go into it. And that's why you need to reach out to that loan officer. And that's another reason why people think that they can just go buy a home. Well, I looked online and I can definitely afford a $650 payment. No, you can't, because this house is actually going to cost you $1,200 a month based upon your specific qualifications. Now, are there people who maybe could get it down that low? Yeah, if you got like a 800 credit score, and you've got some amazing insurance, and if the home, even so, the homeowner insurance and the property taxes aren't going to be there. This is not. So really, the only thing that your credit score is going to impact is what is going to be your rate, what is going to be the type of loan that you have, and that's going to influence your mortgage insurance. And on a conventional loan, if you're putting 5% down, mortgage insurance can vary as well, depending on where it is, how much you're putting down, how many borrowers are on there, what is the exact credit score, what is your debt to income ratio. There are so many factors that go into these because it's mortgage insurance, and they're taking into what type of risk are you. Government loans have a flat rate, boom, okay? So these are things that you just have to understand when you're buying a home. All right, I hope this helps. If you have any questions, leave them below, and until next time, it's all for one and one for all.